Hi there, I'm Jennifer Lee, Senior Economist at BMO Capital Markets. Well, it's a new day, a new era. After a peaceful transfer of power, the U.S. has a new president. Now, U.S. President Trump is coming in to his new role at a very good time in the U.S. economy. We've got steady economic growth, steady job creation on a monthly basis. The jobless rate is at its lowest level in over 9 years. Wage growth is finally starting to pick up, and inflation is also starting to pick up finally. And the U.S. Federal Reserve, they are moving rates off of emergency low levels, and they're starting the process of normalization. So there is some debate about whether or not all those promises that Mr. Trump made during his campaign, whether they are needed or not. Certainly, some Fed officials do not think that they are needed. But in any event, the president has been very busy during his first week in office. He has met with executives from the auto sector, from the manufacturing sector. He's promised massive tax cuts to the middle class and to corporations. He's promised faster approvals for building for those U.S. companies who want to build factories or plants within the United States. And he's also warned that there will be a big border tax for those U.S. corporations who are looking to shift their operations overseas. So there's been a lot on the go. On net, we see these measures to be positive again on net. And just late last year, we lifted our growth forecast for GDP to 2.4% for 2017 and to about 2.5% in 2018. But of course, there are still lots of uncertainty left, particularly on the trade front. It's starting to sound a little bit more protectionary these days. And there is a lot of uncertainty about how the U.S.'s trading partners are going to react to these more protectionist measures. Of course, I'm thinking about Mexico, who has already threatened to walk away from NAFTA if the negotiations do not go well. Now, Canada, as far as Canada has been concerned, we were assured that we enjoy a very special status and we are not the target for NAFTA. Now, that is assuring, but nonetheless, there is still a lot of uncertainty about how all this is going to play out. And it's that uncertainty that Bank of Canada Governor Poloz alluded to during the January policy meeting. They kept rates on hold, but he warned that rate cuts were still on the table, which sent the Canadian dollar tumbling that day. And he referred to all the global uncertainty and that this growing protectionism could have material consequences for Canada's economy. So all in, there are lots of pluses and minuses, but until we see more action from the U.S., there have been a lot of signing of executive orders lately, but until we see more action, we're going to leave our calls for the central banks as is. We look for the Fed to raise rates 2 times in 2017, followed up by 3 moves in 2018. The Bank of Canada will remain very cautious as we see how the trade measures fall out, and we look for them to stay on hold until probably the midpoint of 2018, in which case a rate hike is most likely. Thank you.